All right, let's get started on some managerial accounting. Up to this point, we have been discussing financial accounting. And so you may have gotten your textbook and thought, okay, financial and managerial accounting, and not much, and maybe didn't put much thought into that. There is a difference between these two types of accounting, and everything that we've been looking at so far has been financial accounting. That's about to change. We're going to change our focus over here to managerial accounting. So we kind of need to know what it is. Let's look at some learning objectives that we have. What is meant by the term managerial accounting. We do need to understand what the differences are between managerial and financial accounting, and we've got some pretty good slides for that. We've talked about the concept of expense and expense recognition in the using the accrual basis of accounting, but we haven't really talked about the concept of cost. We've talked about the expense account cost of goods sold, but we're going to start looking at costs in a little bit more detail because I want you to understand that cost and expense are related, but they are not the same thing. We're going to look at various types of costs, and most of our attention is going to be focused on a manufacturing environment. Now, some of what we're going to discuss could apply to a service related business, but quite honestly, that's not quite as involved. The manufacturing process is a little bit more difficult, so we're going to be spending most of our time on that. And then we are going to look at some differences, subtle differences in income statements for manufacturing organizations. All right, so what is managerial accounting? And the most important thing that we want to jump to right away is this word right here, internal. Managerial accounting is all about providing accounting information for a company's internal users, i.e., company management, whether they be involved in the manufacturing process directly, whether they be part of the finance segment of a business, marketing, etc. Do notice managerial accounting, it says, is not bound by generally accepted accounting principles. Now, we need to be careful here. We need to be careful here because ultimately the decisions that we make in managerial accounting are going to flow into the financial statements, and the financial statements are regulated by GAAP. So be careful here. This is an important distinction, but one we need to be careful with. And then it says we have three broad objectives. So let's think about this and read what it says. It says to provide information for planning the organization's actions. So this doesn't have anything to do whatsoever with anybody outside of the company. To provide information about controlling the organization's actions. Again, we're planning the organization's actions and we are controlling the organization's actions, and we are providing information to make effective decisions. We have choices in business: what works, what doesn't work, what do we think is going to work, and so on. Again, these are all decisions that are made internally. These types of things are not shared publicly. So when we look and talk about the concept of planning, it says that planning is the detailed formulation of a plan of action to ultimately achieve a particular end. Okay, so they've given us some examples here. Uh, it says identifying methods or setting objectives. This is what we want to do. How are we going to get there? And then finally, we talk about improving quality. There's a lot that goes into that. Supplier evaluation program is an example of that, and this really can apply to a company regardless of whether they're a cost leader. Maybe they make calculators that are on sale at Dollar General for $1.95. Well, we're probably going to sell a lot of those cheap calculators, and We're going to have to vet our suppliers. Maybe we are talking about manufacturing a more expensive $99 calculator. Same thing is true. So when we talk about improved quality right here, we're not necessarily saying that the goal is always to make the highest quality product. What we are saying is that relative to our level of product, we may have the worst product on the market. We may strictly be a price leader, that we are going to plan in such a way to achieve our goals. Controlling these are the day-to-day actions. It says managerial activity of monitoring a plan's implementation. And then as needed, we're going to take corrective action. In other words, we have a plan. Uh, Maybe the plan is working exactly the way we wanted it to, but it's no longer a good plan. We may have to take some corrective action, or maybe the plan is not being implemented and we're going to take corrective action. We call this controlling. Okay, so it says compare, for example, what we expected, probably could rearrange these, what we expected to happen in the planning phase with what actually did happen. And then that third part of managerial accounting, that third component was decision making. We're going to have a lot of choices. Remember, if you don't know this already, you should become aware of the idea that in business resources are scarce. And so there are a lot of projects, and in this particular example, what I would ask you to think of is a situation where a company can do either alternative one or alternative two, but they can't do both. So how do we go about making the decision on which one of those to do? Which one of these competing alternatives best matches our overall plan, our goal? Which one of these competing alternatives is going to be the easiest to control and see things through from beginning to end? This slide will help you immensely, I think. We would have looked at something like this, regardless of whether you're in one of my classes or not. We would have looked at something like this way back in chapter 1 of whatever textbook we're using. It really doesn't matter. Pretty much all of them are going to have a very similar example somewhere in the textbook that compares financial accounting and managerial accounting. We just talked about the fact that managerial accounting is internally focused. We've been studying for chapter upon chapter up to this point the fact that financial accounting is for external users. There are a lot of rules in financial accounting because those outside users are not as familiar with company operations. Information is objective, fairly presented, right? In financial accounting, in managerial accounting, we take into consideration both financial and non-financial information. And if we think about the financial statements, we can't put in any of the 4 financial statements anticipated demand or what we think is going to happen with the economy. But that's part of managerial accounting. Doesn't mean that it's in the financial statements, because it isn't. And if it is, it might be buried as a footnote. Historical orientation with financial accounting. What happened? Planning, emphasis on the future, budgeting, etc. Okay. Financial accounting is everything as a whole, everything that we've done. Here are the results of operations. With managerial accounting, we have very detailed information that is produced much more frequently. Okay, so those are some general characteristics of managerial accounting. I would invite you to review this slide. It's a pretty good one. And after this little introductory video, we'll get into kind of the meat of managerial accounting and what it means to consider the word cost.